NVIDIA reporting results tomorrow as concerns around tariffs and AI dominance loom. Joining us right now is Chris Casso. He is Wolfe Research senior analyst. What are we looking for? What are you mostly, I assume the biggest thing is just going to be how much capital they continue to spend and what kind of orders they're getting, because it will say something about the ecosystem and the larger economy, Chris.
Yeah, no, I agree with that. And, all the indications so far is that, capital spending has been very strong. Demand for AI has been very strong. We certainly expect management to address that. On the numbers for the quarter, the big issue is the China export restrictions that have been in place. And, we have that dialed in a little over a $5 billion per quarter revenue impact. The street understands that. Buy side investors understand that. The sell side's been a little slow to adjust numbers. So, there is some estimate risk just because of where the estimates are. But, the other issue is, the question is the ramp of these new projects, the GB200. But, we think it's a setup is for a very strong second half as a result of that.
Because we had Andy Jassy on the broadcast. I want to say we're now in May, I think at the beginning of June. And one of the things we talked about was just the need to get the cost of these chips a lot lower. Not just by half, but even more than that. And that's something that Amazon and some others that are trying to make custom chips are trying to do. How quickly do you think that happens? And obviously that would erode margins eventually for NVIDIA. Or do you think that's not in the cards?
Well, what NVIDIA is trying to do is also kind of lower the cost of compute. And, the way we see it between these custom projects and what NVIDIA does, it's really a race to efficiency, primarily power efficiency, because these things consume so much power. And then it's more about not just the price for the chips, but how much compute you get for each for each chip. We did actually a return analysis last week, and what we were finding was for a GB200 data center, 100 megawatt data center, the return in our base case assumption was about 38% over a 5-year period. So actually, what we're finding is actually the returns for the business models here are very strong. I agree, driving the cost down is really important because demand is going up so much. But right now, it's actually a pretty good value proposition even today.
Look, NVIDIA, when you left, NVIDIA looked like a heart attack. Who wants to touch that thing? The Chinese. But today's there's a piece about what they're doing with Blackwell in China. Tim Cook.
Well, with what might be a chip they can sell in China, unlike the H20, which they can no longer sell, which they took the $5.5 billion write-down for. But on we're going to get guidance from NVIDIA, and that's going to certainly be one of the more important news
100%.
Items of the week.
100%.
Has it already incorporated, the market already incorporated what China's going to look like? Oh,
no,
yeah, you got Jensen on as well.
It hasn't. And I can't wait to talk to him because, he travels with the president. He's got effusive praise for the president, and he has always been, including with President Biden, tell me what to do. I'm happy to do it. Remember, lover, not fighter. And he's very happy in working with the president. And by the way, they make that very clear. And they make it very clear they watch our shows. They look, it would be good if you said what is true.
Yes.
I like that too. Tim Cook has, he too wants to have it be said what's true.
NVIDIA getting a boost this morning, though. That's the stock we're talking about there. You see it up almost 3% ahead of tomorrow's earnings report. The company reportedly working on a lower-cost Blackwell chip for China. That's according to Reuters. Joining us now is Cantor Fitzgerald analyst C.J. Muse. Has a buy rating on NVIDIA. His price target, $200 a share. So suffice to say, he's bullish. A lot of focus going to be, CJ, on the guidance, of course. You are looking for a guidance for this quarter or the July quarter to be much better than feared. Why?
So, I would say that the execution of the supply chain for the full system racks coming out of Asia has really accelerated in a positive way in the last kind of 2 to 3 weeks. And that really gives confidence that the Blackwell product cycle in the July quarter will truly ramp. Obviously, the offset there is the H20 embargo to China. And so I think the buy side is thinking, anywhere from 43 to 46 billion. We previewed 46 billion guide, given the strong execution from the supply chain. I would say that I think anything over 45 would be well received and would likely highlight sequential growth, which I think would be a clearing event. And then very importantly, very strong growth in the second half of the year where we think the underlying demand trends would support 50% half-on-half data center growth. And if we get any sort of inkling from management that that's what's coming, then I think the stock pushes higher for sure.
Yeah, well, the commentary out of the hyperscalers around earnings certainly shouldn't dissuade people from believing that. But what about China? You know, you talk about what I mean, almost the loss of $15 billion in data center revenues as a result of the H20 no longer being available. They took the $5.5 billion write down. But can we expect to get any clarity from them on this call around what they expect in terms of Chinese demand?
I doubt they would pre-announce here before, speaking with Washington, D.C. and the administration. I think that they will highlight the view that, as they've made abundantly clear, is that this is a real negative, call from the U.S. government in the sense that, we're taking away billions of dollars. We're bringing scale to the local players in China. And as they scale and benefit from the purchases there that should have gone to NVIDIA, that's going to help them develop the software as well as the hardware to become more competitive to NVIDIA. I don't think they'll catch up, but a more competitive player in China selling elsewhere outside of China to some of the other kind of tier 3 countries, is not a good thing, I think, for the competitive landscape for AI and for the U.S. to drive that. So I imagine they'll speak a bit to that, but I don't think they'll talk directly to whether their new Blackwell offering will actually be approved.
Shorter term, CJ, I wonder, is this particular print any harder to handicap than ones we've seen the past few quarters? And is the stock running hot into it or not, do you think?
Is it difficult to handicap? Absolutely, in the sense that we've got to take $15 billion of China out. I took $5 billion out of July. If it's 8 or 9, then obviously I'm wrong, right? And you could see further weakness. But I think the good news is, clear visibility to acceleration into the second half. And so if we do see a miss, I think that's the bottom. What else are you planning for on the short side? And you've got, the supply chain executing. You've got China completely de-risked, and you've got a very strong, second half ramp. And the stock, just turned positive year to date, and you've got real positive earnings momentum into the second half of the year. And so, even if they do miss, by $1 billion or $2 billion, I would suggest the stock would get back to where, we started the day, within a day or two. So, I do think that risk reward heavily favors being long here. And, over the next 3 months, I would envision NVIDIA being, the top performer here in semis, as AI is truly the one part of the market where you have legs to growth in the second half, whereas, we're worried about elsewhere in semis, pull-ins related to tariffs. So, this is still the right place to be in my view.
Speaking of NVIDIA, Josh, tomorrow is the biggie, right? After the bell, we get earnings. Shares, by the way, are having their best month, best month since May of 24. So it's been a minute since we've seen NVIDIA feel this energized, especially going into a print. Most of the notes out today are positive. Reiterated overweight at Piper, reiterated overweight at Morgan Stanley. You have price targets of 150 and 160 respectively. Dan Ives obviously bullish going into the number. What about you?
I'm bullish, but that never changes. So maybe that's not that helpful. This is what I would say about the setup. There's massive call buying in the stock going into these numbers. I think the call buying is warranted because we've already heard from their biggest customers, and all of their biggest customers have told us not only were they affirming their current spending plans on AI, but they actually thought that there was room for upside to that spending. So if your customers are saying that publicly 6 weeks ago, why would you expect anything other than another blockbuster NVIDIA report? The setup is very simple. Revenue is expected to grow 66.5% year on year to $43.37 billion for the quarter. That's obviously slower than the 260% pace of growth last year, but we know that that's reflected in the multiple. We're looking for 73 cents on earnings. They crushed the last report. And I think if you look at where the stock trades, Yeah, it's rallying, but it's still 10% below the all-time high. And I think on a PE basis, it's one of the cheapest of the mega cap stocks. 24 times earnings, cheaper than Apple, cheaper than Amazon, cheaper than Tesla, cheaper than Microsoft. Should it be? I don't think it should be. So I like the setup going into the print, and that's where I think we are.
Give me, guys, if you could, like a 3-month, I don't know, back it up a little bit, because the intraday doesn't really tell the full story, I think, of what tells a better story. This stock got, what, under 90 bucks? Wasn't it like 88?
It did.
In the 80s, right? Look at that. It gets down to that area, you're like, well, the stock has really traded sideways for a good period of time. And here you go for a springtime move higher. The stock's back 135 heading into the number. So it changes the dynamic of the setup.
So, like Josh, I think the setup is a bullish one. I actually think the January 7th intraday high at 153.13 could be in play after earnings. But like Josh, if there's a miss, and I could be wrong, we're human beings, we could be wrong on this, my bullishness is not going to change because the stock would move lower, and I still see tremendous amount of positive fundamentals surrounding the stock. If you pull the lens back 11 months, the stock has basically been in a very big trading range. I think if you go back to the end of June last year, you're talking about maybe it's up 2%. And why is that? I think that's because investors have had to adjust their expectations. Josh mentioned, I think it was in May of 24 when they reported year-on-year growth of 262%. Next thing you know, in August, they're reporting 122. So that begins the deceleration in the revenue growth. And I think you can't expect to grow year-on-year 200+%. So the deceleration in that revenue growth is something that investors have become to acclimate themselves to. And I think we're at a point now where there's enough bad news priced in. We know the H20 ban. They've already said to us $5 to $8 billion per quarter. That's ultimately going to be the hit. So I think there's enough priced in here, negative, that I think you potentially have a nice setup where the stock breaks out.
That's Piper's view, that they say they think there's going to be a revenue miss, that they top line miss because of the macro uncertainty and also the H20 ban. They say investors should weather the uncertainty and stay long the stock. I assume you're doing that.
I am, and I bought some at 120 before it went down to 90 or whatever it was. Bought more there, and I'm happy with it now. Just to put numbers through, Joe, what you were saying. I mean, I won't do this for very long, but the 10-year track record on this stock is annualized at 73%, which is unlike anything I've ever seen in my life. 10 years. However, to your point, over the last 6 months, it's exactly flat. And why is that? It's because the growth rate has come down. This is a fact. If you look at FactSet, which is my data source, this 6 months ago you were looking at 40% projected earnings. Now it's 14%. But that's okay. I'm not looking at NVIDIA and saying we're going to get 70% returns from here. But can you get double what the S&P 500? If you got 15% over the next 12 months on a stock of this size, frankly, you should be happy with it. And I would be happy with it. And I'll bet there's a little overshoot to that. But to the Piper Sandler note, sure, there could be a little miss here. I don't think the key thing here is the demand is there. This is what I was talking about with Huang in Saudi Arabia, the France data center, which is going to be the biggest in Europe. These things are going up all over the place.
People who are choosing whether or not they want to buy NVIDIA are not making that choice on an absolute basis, like NVIDIA versus nothing. It's NVIDIA versus the field. What is the field? Apple, right now, trades at a 31 times trailing PE. It sells at 30 times price to free cash flow. NVIDIA is probably going to outgrow Apple, maybe not in every single quarter over the next 3 to 5 years, but probably over the period. I think most reasonable people would say that that's what the expectation is. You're getting NVIDIA at a significantly lower valuation to that expected growth. Now, if you're somebody that's more concerned with things like dividends and buybacks, and the reliability of the iPhone ecosystem, you might pull the trigger on a buy of Apple. If you're somebody that's looking more for bang for your buck on the AI trade, you're buying NVIDIA. And if you get an adverse reaction, by the way, earnings were unbelievable last time they reported. The stock fell 8.5% the next day. That's a gift. If that's what ends up happening here, there's a top line miss because of global macro, and you can scoop this thing up down almost 10% the next day, I feel like that's what you want if you're an investor.
Tomorrow is a huge day for stocks and your money because tomorrow is when NVIDIA reports its earnings. Expectations, of course, are sky high, but there are a lot of questions around all the numbers. So let's go now to Christina Partsinevelos with what really matters in what I think is fair to say will be an earnings announcement, Christina, that gets a little just touch of attention.
Oh, you're right, Brian. Surprise, surprise. But I'm going to say don't expect any fireworks this time around. Macro uncertainty and that pesky ban on the H20 chips destined for China have really just thrown a wrench into things. The streets, big players, really aren't mincing their words either in their reports. Bank of America, Piper, Mizuho, all expecting NVIDIA to actually come up short on revenues for the April quarter and see gross margins likely taking a hit. The culprit is lost revenue from China, plain and simple. But here's the thing. This doom and gloom scenario that I may be mentioning isn't permanent. These same analysts see brighter days ahead for NVIDIA in the second half of this year. First off, NVIDIA is supposedly working on a China-compliant chip that should squeeze under the U.S. export threshold. Word is that it'll likely hit in the market in late July. So it's not exactly a complete farewell to that massive Chinese market. Then there's the Grace Blackwell rack production story. Those manufacturing lines are getting their act together and should really start ramping up later this year. Big boon for demand, and that's a big deal. And let's not forget about the sovereign AI investment cycle that's picking up steam, plus all that continued CapEx spending from the hyperscalers. The UAE and Saudi Arabia just committed billions to buy NVIDIA chips and AMD as well. So we're talking some serious deep pockets here that we won't feel right now, but we'll feel in a few quarters. The options market is pricing in about a 7% move in the stock post earnings, and it looks like much of that action is really just going to hinge on what NVIDIA says about their July quarter revenue guidance, Brian, which I've seen some estimates, boogies, as they say, buy-side estimates around $43 to $45 billion. So that's the number that we're looking for.
So the whisper numbers are like not even close to the actual numbers. I mean, sometimes there's like a penny difference, right? Like, well, they're expected to earn 43 cents, but the street wants 44. This is like you could drive a truck through some of these earnings, I think.
Yeah, well, I guess the truck, a $46 billion truck. So initially for Q2, the estimate was around that range, 46. But now that Jensen Huang, the CEO of NVIDIA, came out saying that they're going to take a roughly $15 billion hit because of that H20 ban, there's confusion on when that $15 billion is actually going to come. Is it going to be, in the July quarter? Is it going to be parsed out over several quarters? And so for that reason, you've seen some estimates come down, the boogie estimates buy side, which really plays a bigger role in the stock movement post earnings.
What's a boogie estimate?
It's buy side numbers. So it's just it's not the same as what the analysts that these reports that they put out all the time. It's more specific numbers from the larger institutional investors that have these estimates based off of their own sourcing and stuff like that. So the numbers seem to be a little bit more accurate in terms of what to expect. But often, average Joe watching doesn't have access to those kind of numbers, which is why sometimes it can be misleading when we say, this is the guidance, et cetera.
All right, you know what? This should be a little anxiety about NVIDIA. I know it's like the greatest, one of the greatest companies in the world, right? But think about this. The last 3 times they posted their results, the stock was down a week later, 2 times double digits. But it's always found a way really to rebound, and really shortly thereafter. In fact, I kind of think finding a way is at the core of Jensen Huang's whole approach to business. That's how he broke into, when they tried to keep him out of the business, he got in there anyway. And what has really catapulted the company to the top, I think it's probably the most important stock or company in the world right now. And Wall Street, as you can see here, even though Wall Street strategists always say they don't like the stock, Wall Street analysts all either have outperform, overweight, or buy ratings on this stock, including a strong buy. My next guest is among them Spear Investment Founders, Chief Investment Officer Ivana Delevska is with us now. Ivana, so I want to start with the things that sort of bogged this stock down for a moment. This year they had a couple of major issues. DeepSeek was probably maybe the greatest threat. Has that faded away?
So, Charles, thanks for having me. That has absolutely faded away, and I would say even turned to the positive as people are realizing that there's just not just DeepSeek, but many other tools that are coming to the market. So I would say DeepSeek over the long run is going to be a tailwind rather than a headwind for the stock. The bigger issue were the challenges around ramping Blackwell production, and that's going to get resolved in the second half. So we're in this 2-quarter period where the numbers are really not going to be able to surprised to the upside in an outsized way, the way they were able to do before. But as investors look to the second half, I think the stock here now is more under-owned than previously. So that's really what's providing support.
What about China in general, right? Jensen has this thing, he wants to do things in China. I read somewhere that they were going to do something big there. Obviously the United States doesn't know exactly how to deal with this, right? Because we let China have access to all this great technology. By the same token, the AI community says, hey, if you don't, they'll build it on their own.
Yes, so absolutely, Charles. I'm in that camp. If you don't allow exports to China, they're going to build it on their own. So to the extent that the government can control the way that the products are structured and NVIDIA has access to the China market, I think that would actually be a potentially positive surprise. Right now, investors have taken out all of China exposure out of the numbers. And with the inventory write-down, if they can restructure this product and reintroduce it in the market, I think that would be upside for second half.
You're not worried about Huawei at this point, though, right? Saying they're going to try. They're not necessarily a threat right now. I want to talk about the tailwinds. You already kind of talked about it, right? So Blackwell, okay, so far inconsistency with respect to the rollout. Second half, you think will be big. CUDA, is that like Barracuda?
It's not Barracuda.
Not Barracuda?
But CUDA is really the big advantage that they have. So when you mentioned Huawei, AMD, everybody on the custom chip side, nobody has the CUDA advantage. And that's really where NVIDIA shines and how they're able to gain a monopoly position in the market.
Global AI, that Middle Eastern visit was huge, right? I mean, all of a sudden people are saying, wow, I mean, they're probably more consequential than Europe is right now.
Absolutely. So I think Middle East will be a big driver more for 26 than for this year, but also other countries as well. So everybody's going to have to start investing and everybody's going to have to make multi-billion-dollar investments in this space. We're going to pull up your top.
The first stock up is NVIDIA. We haven't talked about it enough on today's show.
What?
We probably won't be talking about it enough over the next day and a half or so, but that stock is on a tear over the past month, jumping more than 20%, leading into the company's quarterly earnings report after the bell on Wednesday. Nancy, this is an interesting one. How would you be trading this chip manufacturing giant?
Well, thanks for having me, Leslie. We've been buying it. We bought some before Liberation Day. We bought some after Liberation Day. We bought some around the DeepSeek news. I think what you want to do with this company is use the weakness from the headlines to add to holdings. If you look at where they are in the stack of AI, they're in the sweet spot. They are the go-to chip provider, and all of the hyperscalers have told us that they're capacity constrained. So we expect to see the company continue to have Blackwell demand that far outstrips supply. And then now you've got the Middle East announcement, which may in fact be able to replace the limitation in China. So what we're watching for on the earnings is what happened to gross margins and what's the guidance around that, because we've seen input costs increase, of course. And then what is the impact of the H20 limitation to China or ban to China, and how are they going to move around that? But I think Jensen Huang has navigated this one pretty darn well.
What's wrong, Nancy, with Starbucks?
How much does this market need NVIDIA to be good tomorrow?
I still think NVIDIA is as important as it ever was. It's still the poster child for this story, the AI data center development story. If you look at the performance of the stock today and recently, as Christina noted, but you also add in Vertiv and Train Technologies and all the companies in the universe. Listen, the report's probably going to be fine. I think people clearly want to hear about the export restrictions, whether they're developing a lower power chip to sort of circumvent those restrictions, some of their rack sales with the cooling systems. There's a lot in this report that people are going to be focused on, but whether the quarter hits or misses aside, the narrative remains in place. And you heard this from all the companies that reported. CapEx expenditures are the same, if not higher. It just doesn't seem to me like there's a threat to the story in the short term here, irrespective of what the quarter does.
Maybe not. And the earnings report tomorrow that everybody's going to be fixated on NVIDIA. In your mind, how important is that?
It is. I mean, it's one of those where it's important, particularly because we keep talking about it, but also given the fact that whenever you're going to see this market continue on, is just insatiable demand within the AI space. To us, what we're going to be looking at is information on the Blackwell rollout, as well as can NVIDIA in terms of have some offsets to the China weakness, either through other regions or other model lines. So it is important. It probably will dictate the sentiment for the next month. But the key thing is it continues to actually flow through and have its 60% revenue growth that people are assuming year over year. AI to us is still having a good exposure, and we like NVIDIA.
Yeah, Dan, I mean, a reminder, if nothing else, that this is the trade that people continue to believe in and want to pay up for if they have to.
Yeah, I mean, listen, NVIDIA's got 40, 50% revenue EPS growth, so you should, if you're paying up for anything, it should be that. I think the legitimate question within the context of the Mag 7 is the same two questions that we've always been asking, which is, one, why are Google and, I mean, we know the answer, but Google and Meta having market or sub-market multiples and Apple trading at the premium that it does? I think those are much more legitimate questions for the Mag 7 trade than why people are paying for 50% EPS growth in the case of NVIDIA, just because it's less than the 200% we were getting a couple of quarters ago. The trade still seems to me to be working. The CapEx commitments are still there. I don't see any reason why that wouldn't continue for the immediate future.
We'll leave it there.
Let's turn to what could be the week's biggest stock story. NVIDIA earnings tomorrow here in overtime. Shares have rallied in May, up nearly 25%, market cap back above $3 trillion. The numbers are crucial because NVIDIA is at the center of an ecosystem of stocks that could move along with it. Those include semi companies like AMD, Broadcom, and chip manufacturer Taiwan Semi, data center and AI infrastructure plays, including Vertiv, Dell, Supermicro, and CoreWeave, even some software names like Snowflake, C3 AI, ServiceNow, and Datadog. And NVIDIA might be in your portfolio, even if you don't own it directly. The stock is the second largest holding in some popular ETFs, SPY, XLK, and the SOX, and it is the largest holding in the SMH. Joining us now to set the table ahead of those results, Ruben Roy, Stifel Managing Director, and Gil Luria, Head of Technology Research at D.A. Davidson. Guys, welcome. Ruben, you cover, of course, NVIDIA and a bunch of smaller stuff in semi-optical comms equipment. Is NVIDIA, in your view, a host unto itself, or which of these names tend to react the most to it, positively or negatively?
Thanks for having me, John. And yeah, you said it. I mean, NVIDIA is part of this massive AI infrastructure spend and build that we have been witnessing over the last several years. But certainly, that infrastructure spend goes beyond one company, right? So there's a network built around these clusters of AI compute that are going into the data centers around the world, and we have a lot of thematic stocks within that framework that we like, optical component companies, system companies. And you mentioned software. I cover EDA companies, and we also think that that's a fundamental building block of semiconductor designs, and we've seen an accelerating rhythm or pace of semiconductor designs being driven by AI infrastructure spend. And so, yeah, there's a big ecosystem here, and we think NVIDIA numbers will be very important as we think about the overall ecosystem as we look beyond the first half of the year into the second half of this year.
Gil, you've got a hold, I believe, on NVIDIA. Why, especially after this past quarter's results when we heard Meta and some others saying they're still opening up their wallets wider to buy stuff that's got to include NVIDIA chips?
Yeah, so we think the current stock price balances the bull and the bear case. The bull case is the one Ruben presents, where if everything is fine, NVIDIA should continue to grow, and therefore it's probably trading at a pretty good multiple that could keep going from here. The bear case has to do with what the outcome is for China. We really don't know how severe the restrictions are in terms of NVIDIA's ability to sell into China. China is at least a quarter of where ultimately NVIDIA chips end up. And all we know right now is that they had to stop selling H20s. We know the U.S. government is restricting the sales there. We know the government is trying to prevent the sales of NVIDIA chips into Singapore, Malaysia, and other countries from arriving in China. So if China sales slow down from here, it's not going to be enough that NVIDIA's large customers continue to buy. Amazon, Microsoft, Google, their buying is starting to plateau. Meta and Tesla are continuing to buy. But if there's weakness in the China revenue, if there's weakness in some of those other neo clouds that have to raise capital at extraordinarily high rates in order to buy GPUs, there may be downside to estimates. I would point out that NVIDIA estimates were adjusted up all the way to February for 2 years. And then in February, the numbers started getting adjusted down. If the earnings tomorrow lead to further earnings adjustment down, it's going to be hard for the stock to outperform.
Ruben, we tend to spend a lot of time on NVIDIA's near-term chip sales and maybe not as much on how much its software moves and systems moves are actually locking in a loyal customer base that's going to be less likely to move even as competitors try to provide a different kind of value, at least on the price line. What are you listening for on the call? How much value do you ascribe to evidence of that ecosystem growth and loyalty extending?
Yeah, it's developers, right? And NVIDIA has the widest ecosystem of developers built around their CUDA, which is essentially CUDA software, which is essentially the operating system of AI today. And so I think that's one part of the framework that we'll be listening for. But certainly networking, as I mentioned, is becoming much more important as a part of this AI infrastructure build. And NVIDIA has a lot of proprietary networking interfaces that just last week at Computex in Taiwan, Jensen and Huang talked about opening up a little bit of that technology into the broader ecosystem of AI compute that goes beyond GPUs. And so yet another way to potentially monetize this vast portfolio of technology that the company has built up. But to Gil's point, certainly China is something that investors are going to be watching for as a potential risk. But I'd also mention that in addition to hyperscale spending, which continues to trend upward, not at the rates obviously that we've seen potentially over the last 2 years, but we are starting to see sovereign nations, sovereign governments, and other entities starting to come into the mix here. The Saudi Arabian Public Fund, Huang, talked about a big build with NVIDIA. We saw the UAE version of Stargate being announced last week. So I think there's a lot of spend coming, and we're just now ramping the initial Blackwell infrastructure out there in rack scale designs. And I think that's got a lot of legs behind it as we look into the second half of this year.
Looking ahead to NVIDIA's earnings, there are two key items to pay attention to: next quarter revenue guidance, and then gross margins and margin guidance. We know that the long-term thesis behind NVIDIA is extremely strong. But when it comes to how market participants will react in the short term, I think next quarter revenue guidance and margins will be more important than usual on this earnings report. Let me quickly explain why. First, let's cover next quarter revenue guidance. With NVIDIA restricted from selling the H20 in China, the question is what will fill that short-term revenue gap. Prior to the H20 restriction, China represented 13% of NVIDIA's revenue. The Middle East AI deals that were recently announced should help offset what NVIDIA is missing out on from China. But those deals pertain to NVIDIA's Blackwell Ultra, and Blackwell Ultra doesn't launch until the fiscal third quarter, so probably in August. And so the question is what will fill the short-term revenue gap in fiscal Q2 while NVIDIA is both restricted from selling to China, and we're also waiting for Blackwell Ultra to begin shipping in Q3. It was recently reported that NVIDIA raised prices of its products across the board by as much as 10 to 20% due to higher costs at TSMC's Arizona plant. And so perhaps this price increase could help offset the short-term revenue air pocket that we're talking about. That's possible. A positive note on Blackwell Ultra is that the production ramp should be much faster and much smoother than the production ramp of Blackwell. This is because Blackwell Ultra is simply an upgrade of the chips within the Blackwell system. It's not a complete system upgrade like Blackwell was. This means we are less likely to see delays in the production ramp of Blackwell Ultra like what we saw with Blackwell. Now going back to this earnings report, in addition to next quarter revenue guidance, I think that gross margins and margin guidance will be more important than usual as well. This is because of what NVIDIA leadership told us on the company's last earnings call. We were told back in February that margins would dip into the low 70s as NVIDIA spent money to expedite the manufacturing of Blackwell, and that margins would then return to the mid-70s late this fiscal year after Blackwell has ramped. Now Jensen told us last week at Computex that Grace Blackwell is in full production. And based on TSMC's April revenue report, we can infer that Blackwell production has ramped substantially. TSMC is the company that manufactures NVIDIA's chips, and they reported month-over-month revenue growth of 22.2%, which is massive. And so I wonder if Blackwell's production ramp is ahead of schedule, and therefore maybe we could get higher than expected margin guidance. But there's a caveat on this point. NVIDIA did not make any distinction between the production ramps of Blackwell and Blackwell Ultra on the earnings call in February when they spoke about margins returning to the mid-70s. And so now the question is, will we have to wait until after the production ramp of Blackwell Ultra for margins to return to the mid-70s? Or will margins move back to the mid-70s sooner than we thought since Blackwell is now in full production? Hopefully we will get clarification on this specific point during the earnings call. And so all of that to say that margin guidance will be more important than usual on this earnings report. Another topic that I expect to be brought up on this earnings call is NVIDIA's next chip for China. It appears that NVIDIA is working on a new Blackwell chip specifically designed for the Chinese market that would be compliant with U.S. export controls. There have been reports claiming that NVIDIA plans to launch this new chip in China starting in July. And so now the question is whether that is true or not. And if it is true, what impact will it have on NVIDIA's gross margin? NVIDIA's margin on the H20 is estimated to have been in the 50% range, which is much lower than NVIDIA's gross margin in the 70% range. And so if there is a new China chip on the way, what impact will it have on NVIDIA's gross margin? These are all important questions that I'm sure will be brought up at some point on NVIDIA earnings call. All right, so those are some important topics to look out for on this earnings report. Now the question is, what should you do ahead of earnings? I'm not a financial advisor, so I cannot tell you what to do. That being said, here are some thoughts that I think may be helpful to you. Before an earnings report, I think it's important to ask yourself this question: is this position a long-term investment or a short-term trade? Once you have a clear answer to that question, the decision-making process becomes much easier. If the position is a short-term trade, then that is a more complex situation. I personally don't like to hold short-term trades into earnings reports since I don't know what the earnings results will be, but that's just my opinion. On the other hand, if this is a long-term investment that I intend to hold for the next 5+ years, then I would rather hold through earnings, go through the earnings report, listen to the earnings call, take some time to consider the results, and as long as nothing fundamentally negative has changed about the company, then I have no reason to sell. It's that simple. Also, just a word of caution: be very careful about holding options into NVIDIA's earnings. I'm not telling you what to do, but I just want you to be aware that implied volatility crush is usually very substantial right after NVIDIA reports earnings. Let me quickly explain what this is. So before NVIDIA reports earnings, option premiums are usually juiced up and more expensive than usual due to all of the extra volatility ahead of earnings. And then the very next day after NVIDIA reports earnings, volatility usually drops off a cliff, pulling down option premiums with it. This is what is known as implied volatility crush, and it is no joke. So just be careful if you're thinking about trading short-dated options around NVIDIA's earnings. That is not something I would recommend. But again, I'm not a financial advisor, so I cannot tell you what to do. If you need help with your unique circumstance, consider reaching out to a certified financial professional who can help you with your unique situation. All right, so those are some of my thoughts as we head into this earnings report. Regardless of how market participants react to this specific report, I am bullish on the long-term future of NVIDIA, and I expect the long-term thesis to be strengthened both by this earnings report and what we hear on the earnings call. AI demand is extremely strong based on what all of the hyperscalers told us on their earnings calls and what we've been hearing from other companies like OpenAI, xAI, Perplexity, and others. NVIDIA still maintains a strong competitive moat across both hardware and software. I think that NVIDIA's new NVLink Fusion has massive implications for NVIDIA, maintaining its moat and keeping clients within their ecosystem. And NVIDIA is still delivering performance upgrades that are so significant that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. I'm completely serious when I say that I think NVIDIA still has runway ahead of it, and I genuinely think that this company's best days are ahead. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.